Today we're going to take a look at really how to get started with your new project. We're going to look at how to fund the car wash itself. We'll give you some insider tips on how to make your job easier. We're also going to let you visit with some of our car wash operators that have been successful in managing to start up their car wash with various methods of capitalization. First, let's review the three main methods of financing your new car wash operation. The first one, the most conventional way, is a traditional bank loan. You'll have to put down about 25%, but the benefits is you'll create a great relationship with your local banker. Another option is a Small Business Administration, or the SBA loan. Here you typically put down a little bit less money to start up, but you encounter larger fees and a longer approval process. Finally, you can go with the venture capitalist, but watch out for high fees and higher interest rates. Let's begin by talking to a banker who's recently financed a car wash operation. We're going to speak with Kevin Rafferty. He's from Co-America Bank.
The benefits of conventional financing are typically a better interest rate, and particularly a fixed rate of interest is available for those who are desirous of a fixed rate. So lower interest rate and the ability to get a fixed rate. Well, there's a lot of challenges in financing that business. Getting a lender to say yes is probably the most difficult, but the paperwork can tend to be cumbersome. Getting a loan package together, having your traffic count, your location, getting all your financials, having your projections, it's time-consuming and it costs money. There are some lenders who like the industry that are more knowledgeable about today's trends, and they get more comfortable with the industry. What I like about the industry as a lender, I can look at the location, the demographics and traffic count, and I can have a high predictable guess on what the revenues are going to be, and I know what the expenses are going to be. So it's a very predictable industry from estimating revenues, expenses, and the ability to repay.
Kevin brought up a lot of good points and offered some valuable insight on how banks can help finance a new business. But traditional bank loans may not be for everybody. Now, SBA loans, they can be a tricky proposition. You're going to have to fill out a lot of forms and provide even more documentation. Well, Scott Blackstock of Tidal Wave Car Wash, he accomplished this task. He opened his car wash in Atlanta, Georgia in 2004, utilizing an SBA loan.
Luckily, I've had a relationship with banks for a long time. Have your information ready and together. They want to see like a biography or whatever of yourself, explain how you're qualified and what you will do. Have some backup people. Banks, they're businesses. If you get run over by a truck or decide to go to the Bahamas and go sailing, they want to know that there's somebody there that can step in and handle it if you're not there. Remember that a bank is a business. They're doing you a favor to loan you money, but you are their customer. Really, that's where they make their money.
The SBA is the Small Business Administration, and it is a government-backed loan. It is not a direct loan. A lender, a commercial finance company, or bank will lend you the money with the government guaranteeing a portion of that loan. The advantages of SBA financing are less money down. They can finance 80% of the total project cost, a longer term on the loan, and it's a little easier in which to qualify if one has less experience. So the benefits of lower down payment combined with a longer amortization on the loan, combined with easier underwriting. The three most important things in real estate are location, location, and location. In the financing industry, or in the SBA industry, the three most important things are loan package, and loan package. Know exactly how much money you want to borrow, know exactly how it's going to be repaid, know the traffic count, know the demographics, know what type of car wash you're going to works best in that facility and why in that location. Know who's going to be the manager and have a lot of paper trail to memorialize your business plan. As an SBA lender, what I'm looking for with a borrower is somebody who has a business plan together, who has detailed projections and done very conservatively, knows the demographics, knows the traffic count. They have the ability to put in 20% down. Some of that could be gifted or borrowed from family members. And they have their financials together. They know the location. They know what type of car wash they're going to run, being express, full service, and who is going to run the operations on a day-to-day basis. Hopefully their credit is adequate. It doesn't have to be excellent, but adequate. And if they have all those elements put together, they'll generally meet with success.
Traditional bank loans and SBA loans were always been the most popular method of financing for most new car wash projects. Venture capital firms were always the last resort for many operators. The perception was that if you couldn't get your bank loan or your SBA loan, and you've exhausted all other resources, you'd have to go out looking for venture capitals and put a group together. Due to some new excitement within our industry, we're finding that venture capital firms are being used more and more often in this new investor-driven market. Groups are coming together to work with venture capital firms to help develop and build several locations within. We sat down with David Kortz of HT Ventures in Nashville, Tennessee, to discuss how the venture capital approach really works.
Of course, we looked at SBA, we looked at traditional financing. Fortunately, a lot of our backgrounds have been in venture capital, or at least raising money from venture capital, so we kind of knew what we were doing. Car washing is it's difficult anytime to raise venture capital money. It's extremely difficult in the car wash business because VC has basically been built on technology for the last 30 years. And while there's a component of it, this is really a retail service business. So you have to be able to identify or know a VC that is willing to fund a retail service business. But there's a lot of advantages, obviously, to raising money this way. And we're fortunate enough that we had a network where we could do that. The upside is you can raise a lot more money, a lot more quickly, and you have someone who's sharing the risk with you as well. It's not all on your shoulders. You're not personally guaranteeing loans from the SBA or whatever else. And you also have a financial partner with you. If you need more money, there's a lot of times availability for that. And you also have someone who's just got years and years of experience to sort of help guide you and help make decisions. Well, you give up equity in your own company, which is a good thing and a bad thing. You are answering to somebody else as opposed to just for yourself. A lot of times the venture capitalist, it's really a 10-year partnership with that person, so at some point in time it's possible that your interest and the venture capitalist interest won't be aligned. They've got to get their money out because they have to answer to their limited partners as well. It's a difficult way to go. You can spend a great deal of time trying to get venture capital and not find one that's willing to do it, or find one that you can come to terms with. And there's a long due diligence period. I mean, they really vet out management as well and make sure that you've got not just a sound business, but the right people in place. And that's a 3 to 4 month process where they're doing background checks and reference calls and things of that nature. Venture capitalist is looking for high growth opportunities, not going to be satisfied with a dividend from cash flows. They're looking for 25 to 35% compounded returns over 5 years. So we can't just build a few and then pay ourselves and pay the VC. They care about capital gains and not about cash flow.
Here at Sonny's, we help hundreds of operators every year get their car wash project rolling. We're constantly learning new tips from these customers every day. Here are a few more ideas that some of our customers and good friends and other industries are willing to share with you in regards to getting financed.
Build-to-suit option is a good option for people that are not financially stable enough at this point to be able to go out and buy their own property and finance it. A lot of property owners have the property that they are willing to lease, and a lot of times they're willing to do the build-to-suit, whether it be with cash that they currently have that they just want to return on that investment, or they actually go out and get their own bank financing and use the lease for that property as their collateral. And it's a very good way, especially for smaller operators, to get started. And then later, as they build their business and become more and more successful, then they can go out and buy their own land and build their own building and move on down the road. But what we have found over the years is that on some projects, especially when the property prices are so high, we're better off doing a build-to-suit because we can actually get better lease rates for our company by having somebody that is a build-to-suit